Hello and welcome to Our American States, a podcast from the National Conference of State Legislatures. This podcast is all about legislatures, the people in them, the policies, process, and politics that shape them. I'm your host, Ed Smith.
Approximately overall, 47% of Americans lack access to a retirement plan. That translates to about 57 million.
That was John Scott, the director of the Retirement Savings Project at the Pew Charitable Trusts. Scott is one of my guests on this podcast, which focuses on efforts to create state-facilitated retirement accounts. As many as 56 million private sector workers lack access to a retirement savings plan through their jobs in the U.S., according to Pew's research. Analysts who conducted the research estimated limited retirement savings could cost federal and state governments hundreds of billions of dollars by 2040. Scott talked about the scope of the retirement savings problem, the difference between public and private employers, and the most promising approaches to help more people save for retirement. Automated savings programs to help people save have already been enacted in 11 states, and lawmakers have introduced measures in other states. My other two guests have been involved in those efforts. Senator Dallas Harris, a Democrat from Nevada, and Representative Michael O'Donnell, a Republican from Missouri, talked about the legislation they've introduced, how they've worked with employers in their states, and the key challenges they faced in passing their legislation. Here's our discussion, starting with John Scott. John, welcome to the podcast. Thanks for coming on.
Ed, thanks for having me.
Well, John, we're going to talk today about being ready for retirement, at least from a financial perspective. And as someone who is semi-retired, I'm not sure any of us are really prepared for retirement. But if there's one place you want to start, I think it's probably with your financial situation. So let's talk about what you and other experts in this area mean when you talk about retirement readiness and the various financial resources, whether it's Social Security or savings, pensions, that are involved in that preparation. So give us the overview on that.
Sure. I think it's a great place to start. So different people, whether that's a worker, a small business owner, a state legislator, will have different views on what retirement readiness means. For me, and I think for a lot of folks who work in the policy space, it's really about maintaining a standard of living in retirement. We have a standard of living while we're working. Our income goes to our housing and healthcare and enjoying life. Ideally, we'd like to maintain that level standard of living throughout our older years. Obviously, there's some changes when we retire. Some are sort of good. We don't have a lot of workplace expenses like commuting, but the data also shows that our healthcare expenses also go up as we get older. And also we have those sort of shocks in life, those unexpected events that maybe there's the roof needs to be repaired or some healthcare expense crops up that we didn't expect. So part of retirement readiness is both planning ahead for that standard of living that we're familiar with, but it's also planning ahead for those inevitable shocks that occur. And I would also add that something that people don't think about in terms of retirement readiness is that the idea of longevity. We're living longer, and that's been true, over the past few decades. Our lifespan has been increasing. It's stepped back a little bit over the past few years, but I think we can expect it to go forward. And so there's also the risk of outliving your assets, that we can live into very old age, and that's a very real possibility. So thinking about all that and combining all those resources you mentioned, like Social Security, our own savings, workplace retirement plans, I would also include health insurance, long-term care insurance, all these things that help us maintain that standard of living. All feeds into that idea of retirement readiness.
My mother-in-law, who passed away last year, lived to be 101, and I don't think that she ever anticipated that she would live that long. So I think that's an excellent point to make. We know what it takes to be ready for retirement. We need an assortment of resources, both for standard of living as well as the unexpected. But let's talk about the flip side, which is, from what I've read, an awful lot of Americans are not ready for retirement from a financial point of view. Millions of people, according to the Census Bureau, aren't ready. And a considerable number of people, I guess, have no retirement savings at all, which is kind of breathtaking. So why are we in this situation? What are some of the big factors that have left so many people unprepared?
Well, you're right. I mean, the savings level in this country is pretty low. I think the Federal Reserve estimated that 1 in 4 non-retired Americans do not have zero retirement savings. Vanguard has reported that just amongst its own client database, which is a few million people, The median amount saved is $35,000 in their retirement plans, which is, if you think about 50% of their investors have less than $35,000 in retirement savings. That's not much to live on if you're going to live for another, 15, 20 years. We have that low level of savings, and the big driver of that is the lack of access to a workplace retirement plan. And that's not to, we do have an employment-based system of providing retirement benefits, and I certainly want to make clear this is not throwing businesses under the bus. Many employers that we've talked to are in our own research. They want to do the right thing. They want to offer retirement benefits, not just as a tool to attract and retain talent, but, and this is a direct quote, because it's the right thing to do. They really want to see their employees do well. But for many employers, especially small business, they can't afford retirement plans. And also, small business owners wear a number of different hats. So they really don't always have the bandwidth to operate a retirement plan. So that lack of access, I think, is the real driver here. And the fact that many employers find it difficult to offer retirement benefits is a key factor.
Let me ask you, and this might be a little off the overall theme, but I think I'll probably be asking this question for the next couple of years. Did the pandemic affect this situation? It seemed to affect everything else in the world. And I wonder if that was a factor here for some people.
I think it has. I think you alluded to it. I think we're still going to be learning a lot about what the pandemic did to many aspects of our lives going forward. But it's undeniable that the pandemic had a huge effect on jobs, on the movement of people from job to job or out of certain jobs. Many small businesses were particularly hit hard, and we know that lack of access to a retirement plan, that's especially true for small businesses. So I think the pandemic had a big effect. I don't think the data has caught up in terms of measuring what that effect is, but I think it's going to be very clear soon.
Yeah, I think that's probably true in so many areas that the data will tell us a story a few years down the road that we just don't have in sharp focus yet. Talk a little bit about the retirement savings options that are available for private sector workers versus public sector workers. How does that differ?
It's a great question. I have been talking about employees generally, and I tend to focus on private sector workers because that's where the real need is. Public sector workers, generally have access to a retirement plan, whether at the local or the state level or the federal level, of course. Many do save, many participate, many have their employer contribute to their retirement plans. Some even have a traditional pension, which promises a certain benefit in the future as opposed to having to save for your retirement by yourself. But even that is changing in the public sector. It's becoming a little bit more like the private sector, where the dominant savings or the dominant retirement plan is saving out of your paycheck. Public sector workers are increasingly saving out of their paychecks for their retirement. But I would say generally they have more access to a retirement plan in the public sector than in the private sector.
Well, yeah, I think I am one of the dinosaurs. I have a little bit of a pension from working in the newspaper business. And I think that has pretty much disappeared entirely in that industry, and I know in many others as well. So let's talk about the private sector. As you said, this is really where the need is. What are the retirement savings options there, and to what degree do people take advantage of those programs when they do have them available?
Well, I think there are two pathways. I mentioned before that we have an employer or employment-based system where it's really up to the employer to offer a retirement plan. There's no requirement that employers offer a retirement plan in this country. So there are a variety of different kinds of retirement options that employers can offer. The most well-known, of course, is the 401k plan that many people are familiar with, where people save out of their paycheck and there might be a matching contribution. But there are other types, including there's still a tiny fraction of those in the private sector, as you said, that have a traditional pension. But there are also opportunities for individual savers as well. There's the individual retirement account where you open up an IRA at a bank or an investment firm like Vanguard. IRAs actually today hold the most assets out of all the different types of retirement plans. They hold over 13 trillion with a T in assets. But those are mostly transfers from employer-sponsored plans. So when I retire, I'll probably transfer all my savings over to an IRA. The real issue, though, is that only 13% of Americans save for retirement outside of their workplace, and there's a good reason for that. When an employer does not offer a retirement plan, it's up to the individual employee to recognize that they have to save for retirement. They have to identify the retirement savings vehicle like an IRA. They have to select the provider. I mean, there's many providers, banks and mutual fund companies and investment companies that provide these, as well as select the investments. And then they have to consistently fund that account. So in my own retirement plan at Pew, a certain percentage comes out of my paycheck every pay period. I don't have to think about it, worry about it. It's just done. But in the individual context, they actually have to do something every time. And that makes it difficult for people to save on their own.
That's a significant barrier, I'm sure, for a lot of folks. I also was in work situations where it was just taken out of my paycheck and I didn't have to think about it. And frankly, I think that's a good thing. I'm not sure I would have been as diligent as I would have needed to be if it had all been on me. I'm just wondering, even within the private sector, are there disparities in terms of access to retirement? Some people have them easily, some don't. And does that break down along jobs or sectors of the economy?
Yes. I mean, I think there are a number of disparities. I think approximately overall 47% of Americans lack access to a retirement plan. That translates to about 57 million.
I'm sorry, did you say 47%?
Yes, 47% of working Americans lack access to a retirement plan at their job. And
I'm astonished by that.
It is astonishing. But if you're Hispanic, that number jumps to 64%. For blacks, it's 53%. And women, it's 49% lack access to a retirement plan. And so those are sort of the groups in society that traditionally have been underserved. But when we think about businesses, I think I mentioned small businesses typically don't have retirement plans. It's at 78% of firms with 10 or fewer employees don't provide retirement benefits. And then in terms of industries, the hospitality sector, the construction sector, the retail sector traditionally do not offer retirement benefits to their workers. So it cuts across demographic lines, it cuts across sectors of the economy.
Well, I think that would be a surprise to a lot of people, the level of people who do not have access. So I think that's, if we share with nothing else today, I think that piece of information is awfully important. And our audience, of course, is legislators and legislative staff and others involved in policymaking at the state level. And I know in recent years, we've seen some increased focus on retirement readiness at the state and federal level. And some states have passed legislation implementing state-facilitated retirement plans for private sector workers. And some others are considering or have already introduced legislation. And why do you think policymakers see this as such a pressing issue in the U.S., and why is it so important to address it now? I think you've answered some of that, but I'm wondering about the urgency that they feel at this point.
I think probably different policymakers would have different answers, of course. There's a little bit of variation in terms of the interest there, but certainly they interact with constituents on a daily basis, and we do have an aging population. So according to research that we have, the elderly population in the U.S. is projected to increase by 50% from 54 million in 2020 to over 81 million by the year 2040. So I think that aging tsunami that's hitting this country is certainly at the top of minds of many policymakers. I mentioned small business. This is a competition issue, and I think a lot of policymakers are concerned about that. Small businesses are competing with bigger firms that have a robust suite of pay and benefits. And for many rural legislators who have small towns where the younger people are leaving to go get jobs with better pay and better benefits, I think that's a concern. And then finally, we've released research that shows the fiscal cost of people who don't save enough for retirement, that if you have insufficient savings, you're much more likely to take advantage of programs like Medicaid and other programs that help the elderly poor. That cumulative cost across the 50 states is $334 billion over 20 years. And that cost is going to be hitting a shrinking tax base over time too. So I think there's different ways to, get the attention of a policymaker. I think all of those are relevant.
Yeah, that ought to get their attention. Yeah, I think those numbers are pretty persuasive from an attention-getting point of view. So given that, what do you see? You folks have done a lot of research on this. What are the most promising policy solutions that could help solve this problem, or at least close this retirement savings gap that you're seeing out there?
Well, I think there's some good news in the sense that there's a lot of interest. We've seen a lot of legislation with some different proposals around the country. I think it's fantastic that state legislators are taking an interest in this issue, and it really, cuts across geography and party lines. In terms of how do we address this root issue of getting access to retirement savings opportunities that's payroll-based, people can save on a regular basis, and it's sort of automatic, we have gone behind a particular solution that we call automated retirement savings programs. They go by other names depending on the state, like Secure Choice or Work and Save. But 14 states have passed legislation to create these automated savings programs. There are 7 in operation today. Oregon Saves was the first one to start enrolling savers back in 2017. So relatively new, only a few years old. And the way it works is that if you don't have a retirement plan at your job, you would be automatically enrolled into the savings program that's run by your state. You have the option to opt out at any time. You could change your contributions or investments at any time. But the idea is to get you into the program. This is particularly important for younger workers who maybe hold off saving initially, but even a small amount early helps a great deal. How we get to scale in terms of getting as many people in the system as possible. All employers who don't offer retirement benefits are required to provide or offer this program to their workers. But that's really all that employers have to do. They just have to facilitate the payroll contributions, much like they facilitate payroll on a regular basis. And how's it working? So we have data from 4 states today. Over 700,000 people are saving. Over 800 million in assets have accumulated. We would expect to pass the 1 billion mark this year. 2/3 of people who've been automatically enrolled stick with the program, but about 30% do opt out. So if you don't feel it's right for you, you can do that, and people are making that choice. We have found through our own survey research at Pew that businesses that participate in the program really appreciate this, being able to offer retirement benefits when they can't offer a plan of their own. And they can certainly offer a 401k plan at any time if they want. We've also asked employees, and they've said they feel more financially secure because they are participating in this program. They're building up a nest egg that for the long term, but if they have a financial shock, they have some assets available. And finally, it works with the private market, that this is not a government program that competes with the Vanguards and the Fidelities and the other financial services firms, but actually complements it in the sense that it's encouraging employers to say, you know what, that's a great state program, but I'm going to adopt my own retirement plan. And they go off and adopt a 401k. So we feel like this is a good solution that checks all the boxes.
Well, John, thanks so much for taking the time to come on and talk about this. We're going to have a couple legislators on next in the podcast to talk about what they're doing in their states. But I think that the background you've given us is going to give us a little bit better understanding of the situation as we listen to that conversation. Thanks so much.
Thank you.
I'll be right back after this short break with Senator Dallas Harris and Representative Michael O'Donnell.
Join your colleagues August 14th through the 16th in Indianapolis for the 2023 NCSL Legislative Summit, featuring an MVP lineup of speakers, including Peyton Manning, strategic futurist Nancy Giordano, HGTV star Mina Starsiak-Hawk, WNBA legend Tamika Catchings, the first female NFL coach Jen Welter, the founder of the History Makers Juliana Richardson, and Cedric King, a decorated veteran who defied the odds to run the Boston Marathon on artificial legs. Don't miss out on this opportunity to hear from these and other policy experts. Save your seat today for this must-attend conference by registering at ncsl.org.
Senator Harris, Representative O'Donnell, thanks for coming on the podcast.
Thanks for having me.
My pleasure. Glad to be here.
Hey, so earlier in this podcast, I spoke with John Scott about the scope and urgency of the retirement crisis in the U.S. And frankly, as I said before we got online, I was pretty surprised at some of the numbers that he had. It's more significant than I was aware of. So now we want to get down to how states are approaching this issue. And I wonder if each of you might be able to talk about the retirement situation in your states and how it might be different from what it looks like at the national level. Senator Harris, why don't you start with that?
Sure. So I think one of the most astonishing statistics here in Nevada is that approximately 45 to 50% of Nevadans do not have an opportunity to save through their employer. And human nature has taught us that if you can't get it right out of your paycheck, you are much less likely to save, significantly less likely to save. And we know those days of working a job for 30 years and counting on a pension are behind us. And so I felt it was imperative that here in Nevada, we ensure that everybody has an option to at least get that money taken right out of their paycheck so that they don't see it and they don't miss it. And so that they can be set up for what's likely to be a expensive retirement, especially when it comes to healthcare costs, increased costs of living, or any of the other plethora of issues that you might see in your old age.
So, Representative O'Donnell, what does the situation look like there in Missouri?
So according to AARP, over 900,000 Missourians don't have access to retirement savings through their employer. It's an expensive endeavor, especially for smaller employers. You mentioned John Scott from Pew. I'm grateful to John for his help in regards to our legislation in Missouri, their work on estimating the fiscal impact to Missouri. All of those folks who are unprepared for retirement, potentially creating $3 billion in fiscal impact to Missouri over the life expectancy in retirement over a 20-year period. And I think that was a big selling point. A lot of folks didn't see the need for this in Missouri. They felt that this was a private sector function. But once they suddenly saw that it could cost the state upwards of $3 billion, people started to think, what can we do to fix this problem?
Let me ask you about the more than 30 million small businesses in the country. And I wonder how state-facilitated retirement plans might affect them, including whether they might push back on it for exactly the kinds of reasons I think you're just alluding to. And Representative O'Donnell, let's stick with you on that.
That was the challenge in the very beginning. So I first filed our legislation 3 years ago, and nobody read it. Everybody just said, okay, here's what's going on in other states. We got to stop it. Well, in Missouri, because we have Republican supermajorities and a Republican governor, there was no way we were going to get a business mandate in place. It just wasn't, that bill wasn't going to get a referral, much less make it through the legislative process. And so plenty of small business owners would like to be able to compete for the same employees as a large business, but offering a retirement savings benefit is simply just cost prohibitive. And so that's kind of that's the service gap that my bill hopes to fill.
How about in Nevada? Senator Harris, what's the small business situation?
Yeah, I think Representative O'Donnell hit the nail on the head. The idea is that there are lots of small businesses who simply cannot afford to offer this benefit to their employees. And actually, I think we've seen in other states where this has been implemented that small businesses do, in fact, benefit because they are more competitive. Their employees do better, and so their businesses do better. The great thing that I love about this program is that it's free to businesses to participate. It's free for the state to run, right? It's mostly funded on the fees of the people who participate. And this is a perfect solution to fill that gap that the representative was just talking about.
Well, Senator Harris, let me stick with you for a minute. You're the main sponsor of SB 305, which recently was introduced for the third time. And I wonder why you think that this is the year your bill will pass. And is there anything different about the political climate there in Nevada that makes it more viable?
Yeah, well, they say third time's a charm, and I'm hoping that's particularly true here. Nevada is a state where you're going to have to bring ideas again and again and again. And it's my opinion that sometimes the best things are the hardest to do, right? And so I know that we're on the right track. I've got the Chamber of Commerce to come to the table, negotiate with us this time, which is a big win. although we do have a split government, we've got a Republican governor, but a Democratic legislature, I'm confident that our Republican governor will be able to see the benefits for Nevadans if he signs this legislation.
Well, we'll be interested to see how that works out. Representative O'Donnell, you recently sponsored HB 155, the Show Me My Retirement Administrative Fund. Can you talk about that and how it differs from auto IRAs?
Sure. So the Show Me My Retirement Savings Program is very different than the auto IRAs that we've seen implemented in various states. Because we had no path for the business mandate, which the things we're seeing in other states suggest that it's a good way to go. It's gotten great participation, and people are sticking with it. People moving out of it after they're in it is not happening. And I think California just passed $500 million in assets under management, which is really exciting. That's a lot of money for folks, and it should change their retirement. One of the things that I sought to do, since we didn't have the business mandate, I started looking at ways to get the best possible retirement outcomes. And one of those ways was to structure it as a 401k, which some studies show produces a better retiree success, better retirement outcome. So our program is a multiple employer program that will look very much like the successful 529 programs. The state of Missouri is not going to be managing people's money. We're simply going to be setting up an RFP to get a Fidelity or a Vanguard or somebody like that to manage in people's individual accounts going forward.
Well, let me stick with you, Representative O'Donnell. You alluded to this before. Senator Harris mentioned this, getting together with employers. For the other legislators listening, I'm really interested in your process. How did you get them in the room? How did you kind of present your idea and try to get them to buy into your vision of this?
I love that Senator Harris keyed in on the Chamber of Commerce. They were my first pushback that I got, and I'm guessing she probably got the same thing. And I was, quite frankly, I was shocked by that, because I saw the Chamber as somebody that was out there fighting for small businesses, and this is just good business to offer this to your employees. And so I was quite shocked by that. But a lot of that pushback I was getting was from folks in the financial services industry, that they saw this as competing with that space. And we were able to show that it didn't. In fact, if anything, on one of those calls, and it was not a happy call, one of those calls I suggested to them that I would rename this program the Financial Advisor Full Employment Act, because we were setting folks up. These aren't folks that these guys are fighting to serve. They're folks that are in a service gap. But in the end, when these folks have spent 20 years at this employer and they've saved $100,000, you better believe they're going to be knocking down their door to try to get that customer. And so that was some of the pushback that I gave, that if they weren't going to fill this gap, we were going to find a way to help these folks that weren't getting the service.
I think it's so interesting when I talk to legislators about this sort of thing, that the amount of work that goes into this, number of conversations and meetings, and just really thinking through and making sure that you're listening to people. Senator, what was your experience working with the employers in your state?
Yeah, I think my experience was pretty similar to Representative O'Donnell's. There were lots of conversations, raised voices at times, but we all came to understand that we were really trying to serve Nevadans. The question was, what was the best way to make that happen? I don't think anyone was arguing that we didn't need to encourage more people to save or to give them some valid option to do so. And so once we were able to talk about what the really hard points were on the edges, we were able to come to a solution, I think, that worked for all parties.
We talked about this a little bit, but Senator, let me stick with you. How about the financial services folks? The approach they've taken in Missouri, that's a pretty good argument. We're gonna divert a whole bunch of money to your members of your industry. But how about in Nevada? How did you structure yours, and how did you interact with the financial services folks?
Yeah, I'm actually taking some notes from Representative O'Donnell, because I'm still getting quite a bit of pushback from the financial services industry here in Nevada. I think they do see this as something that competes with services that they provide. But as Representative O'Donnell noted, we're talking about a whole. These are folks who could currently be served but are not for one reason or another, right? Whether it's because they're working 37 and a half hours and aren't considered full time, or they're independent contractors, or they're an employee at a small business, as we've discussed, and their employer can't afford it. There are a certain class of folks who aren't able to access what's currently on the market. Otherwise, they would have already. And so we're really trying to serve those people. And I've been driving that point home, but I'm going to see if I can flip my argument a little bit and then convince them that we're shoveling some more customers their way.
And Representative O'Donnell, that's kind of the approach you've taken then. And did everybody come around in the financial services side, or did you get sort of some buy-in and some not buy-in?
We did. We made some changes to the bill. One of the things that we put in place, we put a maximum employee threshold at 50. That seemed to get some folks, and that's really the service gap that we're trying to fill, is those smaller folks. But I've had some folks approach me because they're currently offering retirement savings to their employees, but it's so outrageously expensive. I had somebody tell me the story that they were excited because they had set up a retirement system for their I think it was 8 to 10 employees. In that first year, they saved a total of $8,000 combined, but it cost the company $12,000 to do that. And so it's gotten really expensive. The one thing I'll say is really encouraging. I spent a good deal of time speaking with Katie Solinsky, and she was the first executive director of the Cal Savers program. And one of the exciting things she shared with me was that in California, you would think with as much pushback as the financial services industry gave, that they would have just abandoned ship after California stood up Cal Savers. But what Katie said is they've sharpened their pencil. They've actually gotten more competitive. People see a problem, they don't immediately run to the government for a solution. They may see our Missouri program, but it may not be their first choice. They may look at it and say, give me something competitive in the private sector. And so that's exciting to me to hear that news out of California after just 5 years of the Cal Savers program being in place.
Well, you just helped tee up my final question for you as we try to wrap this up.
I'm here for you, Ed.
You've got a pretty good sized audience of legislators, I hope, listening to this. And even though in laying out the problem, we see how severe this is, there hasn't been that much legislation from what I've seen. It looks like it's a trend. It looks like it's coming. But what are the pieces of advice? What advice would you share with your colleagues around the country? Senator, you want to take the first shot at that?
I'd start with the most important piece of advice for me, and that was try again. You may not get it done the first time, but this is a piece of policy that is worth doing. We can't wait on Social Security to get its stuff together. We can't wait on the federal government to come and save our residents. We've got to make sure that they are well suited for the retirement that is ahead. Otherwise, all of our state social programs are going to be in dire trouble in 30 or 40 years. And so this is a problem that we can solve today. I'd also say talk. Talk to everybody. Talk to your state treasurer. Talk to your colleagues on the other side of the aisle. Talk to your chambers of commerce, not just the traditional ones. If you have a Latin chamber of commerce or an urban chamber of commerce, speak to them as well. Talk to as many people as you can. Get the stakeholders in the room early, and you'll have a chance to iron this out and get something done. Lastly, I'd say don't be afraid to compromise. Legislators should know at this point, right, there's no perfect piece of legislation. And so be willing to find ways to bring people on board. The one thing I refused to compromise on was the opt-in versus the opt-out. If you do an opt-in program for the auto IRA, at least, it collapses under its own weight. And so I just wanted to give that one caveat when it comes to being willing to compromise. Don't make the legislation fail. Other than that, you follow that, you can get it done.
And Representative O'Donnell, how about for you? And it sounds like part of your suggestion might be also look at the private sector options in your state. It's not necessarily have to be a public policy. Maybe it's a public-private kind of thing.
Yeah, absolutely. Like most legislators, I came here to fix problems. For me, I didn't realize that this was a problem. So, as a legislator, I would suggest to other legislators, hey, this is a problem. You should look at, what's going on in your state and how big of a problem is this. Pew, and I would also say the Georgetown Center for Retirement Initiatives, Angela Antonelli, they can share a lot of information if you're looking at putting legislation like this forth and really show you that there's a lot of problems out there. Lastly, I mentioned earlier that 900,000 Missourians don't have access to retirement savings through their employer. If while my legislation that we've passed, it's not going to save all 900,000 of those folks. But if just a quarter of those folks that are unserved in this area, get retirement help, that's almost 250,000 Missourians who their retirement trajectory has been completely changed by this program. And if that's all I do in my tenure in the Missouri House of Representatives, I will feel that all of my hard work will have been well spent. That's a meaningful impact. So I encourage any legislator to look at what's possible in your state and push forward.
Well, thank you both. This is such an interesting topic, and this is a great conversation, I think very informative for your colleagues, and I thank you both. Take care. I've been talking with John Scott of Pew, along with Senator Dallas Harris and Representative Michael O'Donnell, about state efforts to help more people save for retirement. Thanks for listening. You can check out all the podcasts from the National Conference of State Legislatures by searching for NCSL Podcasts wherever you get your podcasts. Tim Story, NCSL's CEO, hosts Legislatures, the Inside Story, where he focuses on leadership and legislatures. The Our American States podcast dives into some of the most challenging public policy issues facing legislators. On Across the Aisle, host Kelly Griffin tells stories of bipartisanship. Also check out our special series, Building Democracy, on the history of legislatures.